Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio of Danielle Rutsky. She's ETF Senior Product Manager at Nasdaq. And we're going to discuss trends that we saw in 2022, outlook moving forward, and how Nasdaq participates in the exchange-traded product industry. It is great to have you with us, Danielle. Welcome back to Trade Talks.
Thank you.
What was 2022 like for the ETP industry?
2022 was very busy for investors and the Nasdaq Exchange Traded Product, or ETP team. We had Russia's invasion of Ukraine, high inflation, and an active regulatory landscape with SEC and FINRA proposals around ESG and other new product types that could impact ETFs. And amongst all that, we had US ETPs topping 3,000 when we were only at 2,000 5 years ago. Also, 2021 ETFs broke that record for inflows with $614 billion in net inflows for 2022.
What about mutual funds?
Mutual funds experienced over $900 billion in outflows in 2022 when more than half of the ETP launches were focused on active, fully transparent. Investors and active shops are becoming more comfortable with these exposures in the ETF wrapper, as there was $100 billion in actively managed ETFs in 2019, and that has more than tripled and has room to grow. Mutual fund conversions will continue to drive some of that growth in 2023, as Fidelity was the newest issuer in 2022 to file for these types of conversions, and we're excited to partner with them on these products.
What other trends did you see with ETP launches?
We had 419 new ETPs join the market from over 150 issuers, and 86 of those came to Nasdaq, which is 121% year-over-year growth in new launch capture. Thematics, ESG, and distinct exposures continued to drive these trends. And we had 21 issuers join Nasdaq for the first time in 2022, and our brands align naturally because we just promote innovation and investing for the future. So we're excited to continue partnering with them.
How did ETFs handle the economic uncertainty that we saw in 2022?
2022 was again a defining year for having ETFs as not only an access vehicle, but a building block for model portfolios and also a tax loss harvesting tool. In September, we saw volatility reach a 3-month high, and ETP volumes were 29% of US equity transactions, which is the highest since December 2018. We also saw significant volatility in crypto markets, but looking at cryptocurrency ETFs, we actually saw them perform as designed and track their underlying assets, specifically Bitcoin futures funds such as BTF during the FTX event actually was a turning point for investors, and volume spiked while spreads remained tight. So it proved the ETF's resiliency even during times of market stress.
So how would a recession impact the ETP industry?
An economic downturn could impact ETP pipeline. However, looking at 08 and 09, even though liquidations grew and new launches slowed, we still had a growth in overall number of ETPs. There was also net positive inflows, and we had AUM growth. So the ETF ecosystem has matured and grown since then and proven its resiliency. So I'm excited to see ETFs issuers' creativity in product development in 2023 for investor demands.
So what can we expect from the ETP industry moving forward?
PwC report predicts that ETP U.S. assets will double to $13 trillion by 2026, and aside from mutual fund conversion growth, we'll likely continue to see taxable SMA to ETF conversion, which allows RIAs to better access tax and operational efficiencies. Preparing for this, our team expanded in 2022, and we have over 170 years of combined industry experience to support issuers. And taking advantage of that, we had 20 ETFs with over $6 billion in AUM transfer to Nasdaq in 2022, the most of any exchange. And in 2023, we're excited to continue promoting them on our Times Square Tower and our iconic opening and closing bell ceremony, as well as partnering on ETF investor education and events. We're also studying the SEC market structure proposals and any possible impacts they could have for retail investors and ETFs. And to that effect, we're also soon releasing our second annual retail investor survey to give market participants an insight as to how a year of volatility has impacted investor risk appetite and ETF preferences.
Busy year for your team on the horizon. Thanks so much, Danielle, for joining us. And thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.